day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Taiwan index holding on to gains of 1.7%. Hang Seng holding on to strong gains. Kospi also seeing a very strong gain. So overall, Asian markets are seeing a very positive up move in the trading session.
You should expect slightly smaller job numbers that are consistent with high GDP growth right now.
S&P 0.47% higher, Nasdaq about 0.9, Russell 2000 about 0.75% higher.
If you look at the price of cotton and the ICE futures and all, so I think that is comparable. In fact, India has got a premium.
After a strong set of earnings in Q3 FY26, when internals are looking very strong.
The small cap index after yesterday's almost 3% rally is up about 0.25%.
These numbers, decent numbers, but nothing that suggests this bigger move after the 4% up move yesterday as well.
It's interesting to see that when you're looking at it, the equity funds, the inflows that have come in, a bit of a reduction again you're seeing, though steady. Not much to complain.
The EBITDA has gone up by 55% and it's a beat on all these fronts, including the EBITDA margin, which has seen an increase of roughly 90 basis points.
The Nifty is still up around 60 odd points, but we are off the highs of the day, and that's the similar case with mid-caps as well, but they are outperforming the benchmark.
Well, a bit of a wibbly-wobbly trading session, but that was the day so far. Hello and welcome to Closing Bell. I'm Nigel D'Souza, and joining me in just a bit from now will be Reema Tendulkar. Prashant's not in for today's show, but otherwise, markets looking quite good. Trading high with a gain of close to around 50 points. You know, at around 12:30, 1 p.m. odd, you had some kind of profit taking from around the 26,000 odd mark. That level got rejected, and that's when we saw a sharp downtake. But the good news really is that the broader markets continue to outperform. Mid-cap index is up close to around 0.4%. Number of stocks advancing, outweighing the number of stocks declining. 2:1 is what we are seeing. I think the small cap index as well was holding with a gain of close to around 0.4%. So your portfolios will be feeling good. Some kind of consolidation could take place at current levels. But the next 60 minutes, the weekly expiry plays out. So let's see how that goes. Could add an element of volatility, but I think still you're still skewed towards the upside rather than the downside. How things change in a matter of 7 to 8 trading sessions. Hey, Reema, welcome.
Hi, I think there's one trend that stands out on capital market plays is that. So BSE post numbers has surged nearly 6.5%. Even Edelweiss financial reported numbers, and look at that stock skyrocket. That's got a gain of close to about 8-odd%. GM Financials is moving well. And outside of that, so that's one big trend that you can see in the market. And then you've got a lot of earnings reaction. So Railtel, of course, post numbers is significantly higher in trade. You've got strength coming in. Samvardhana Motherson Sumi came out with numbers. Stock is holding up in the green by nearly 3-odd%. And Eternal and Swiggy also seeing some buying. Those stocks are up nearly 5%. But let's find out how you should position yourself. Okay, before that, let's tell our viewers what we've lined up on the show in the next 1 hour. Indices have come off from the high point of the day. The Nifty is hovering around 25,900. Autos, metals continue to be on a firm footing, while pharma counters are on the back foot. The top story of the day: sobering mutual fund data for the month of January. Equity inflow slump 14% month on month. But gold ETFs see a sharp spike. We decode that data in just a bit. Pharma names downbeat. Aurobindo Pharma, Zydus Life on the back of earnings. We'll take stock of that in just a bit. And rupee has now become the best performing emerging market currency today. We'll understand why with Lata in just a bit. And shares of Samvardhan Motherson Sumi also spike after reporting Q3 numbers. But let's find out how you should position yourself in the last hour of trade. Mitesh is now joining in. Mitesh, thank you very much for joining in. It's higher, but not convincingly. But we're managing to hold on to gains, and 25,900 above that level. Banks are on the flatter side. How have you assessed the day today, and what are the closing strategies?
Good afternoon. So, since yesterday, we've been maintaining that we could see a target of around 26,000 and then 26,300. So I think the first target is done. We got a high of around 25,990 thereabouts. And I think it's prudent to take some profits over there. In case you get an entry again around or just below 25,800, I think that's the time to look at long positions again. But on stock side, I think there are a lot of opportunities. So HUL, the entire FMCG pack is showing signs of strength. HUL is a buy the stock at 2424 for targets of 2490. And Fortis, the other one, that's a stock which I would recommend taking long positions with a stop at 874 for targets of 925.
Got it. Okay. All right. Thanks a lot for that, Mitesh. Well, let's focus on the markets then. A few stocks actually that are calling for attention. Sterlite Tech, that stock is really bucking the trend, up close to around 10% as we speak. And Eternal as well as Swiggy. Both those two stocks are performing. Good time to welcome Dharmesh Kant, Head of Research, Chola Securities, who joins us on the show. Hi, Dharmesh. Since the last time we spoke, I think you had highlighted a couple of stocks and they've done well. PowerMech, if I'm not mistaken, that's a stock that you all have been quite positive on. It went through a correction. That's pulled back. I think the last 5 days, stock is up more than 10%. And Orient Pro, you had highlighted that it's a products company. So that as well has done well. Anything new on your radar?
Yeah, good afternoon, Nigel. Thanks for having me for the show. I mean, stock specific, there are a couple of ideas we are working on. So the report is awaited till that time. Excuse me for that. But I mean, fundamentally speaking, I think the market is, constructively poised and looking forward to value buying and stock picking. It's a market for, mid and small cap where you can find good ideas and work on it. If the numbers trajectory has been fine, management commentary is confident, then definitely a lot of opportunities is there. I think specialty chemical is one area which one should be looking into. Though the stock prices have moved and some of them are, now on a higher end of the valuation multiple. But having regard to the, trade deals being done with EU and US, I think there's fundamentally further more upside around about there. So we saw Navin Fluorine came out with very good set of numbers. Previous Specialty is one company which we have been liking very much for last few quarters, and the numbers have been again strong, solid out there. Aether Industries is there, SRF is there. So a basket of this can be, built into and traded for, medium to long-term kind of a gains. So a lot of opportunities out there. And in private sector banking space, I think if one can play a contra bet, giving regard to 1 or 2 quarter of, again, a bit of a sluggish, but I think the bulk of the pain has been through. We have been liking IndusInd Bank quite a lot. I think the major pain is through, and here on, incrementally things will start moving up. It's very cheap, available at around 1 time price to book value. And we have seen the past history. If that is being repeated, then definitely it's a doubler in, say, next 1 year or 2 year kind of a time frame.
Let's talk about pharmaceutical names. Aurobindo Pharma is declining in trade. Q3 profits were impacted by the labor code charges, though it reported better revenues, versus expectations. Vinny is here to do the number crunching for us. Vinny?
Hi, so yes, in terms of Aurobindo Pharma's numbers, yes, they were better than expectations, but seems like some pressure is coming in here. Growth in terms of the EU, that was 27% up. ARV for Aurobindo Pharma, that was up around 22.5%. Overall free cash flow, that stood at around $118 million for the company. Now, in terms of geographies also, what was the expectation and US geography when you look at it? $420 million is what the revenue is there in US versus a 417. On a quarter-on-quarter basis, it's remained quite flattish versus analysts. They were expecting much lower of around $400 million. So yes, slight bit improvement there we are seeing coming in the US business. EU business also has seen a growth coming in, and overall ARV as well as API, that's seen a growth. API is the one that seems like continues to be under pressure. 0.2% decline is what we're 0.2% growth is what we're seeing coming in for Aurobindo in terms of the API business. Now, obviously, apart from that, in terms of the con call highlight also, they said that they're achieving break-even or slight profit in the Penji side as well. Next 2 years, they said, will be driven by various initiatives. Aurobindo's observation to Eugia plant are quite procedural, so not much of a worry that we have on that front. This is a key highlight that's come in there. And they expect the injectables business to grow further on from here on, and they expect to sustain the margin improvement that they're seeing, and that will gradually see further more improvement going forward as well. And FY29, they said, will be an inflection point for the biotech for them. So good growth is what they're expecting. Commentary doesn't seem to be bad for Aurobindo as of now.
Got it. All right. Thanks a lot for that on Oro. The stock, though, is now down close to around 7.5%. By the way, to the bottom of your screen, keep an eye out on Vocart. The margins have improved to close to 20%. That compares with around 17.7% odd. That's why the stock has spiked up out there. And the net profit as well has seen a big bounce up. So just going operationally, I think there's an EBITDA growth of more than 25 to 30%, if I saw that number correctly. Revenue growth of around 23%, but the EBITDA growth, yes, that I think is up more than 30%, which is 38% precisely. So that's why we're seeing that margin improvement, and that explains why the stock has spiked up now, close to around 2.5%. So plenty of news with regard to the Pharma pack. But Vinny is still with us. Vinny, we can't let you go so fast. Tell us about Lupin. Those shares are trading flattish. The company has entered into a settlement and license agreement with Astellas. Break it down for us.
Yeah, it's important for Lupin as such because the stock previously has reacted a lot to this announcements coming in, from the court side, any settlement, not settlement. So now finally they are to pay a fixed amount of 90 million to Astellas, and this is going to be mainly to an undisclosed per unit license fee for each unit of Lupin product that is going to be sold on the date of settlement. That's September 2027 as well. Now, Lupin, what analysts are saying on Myra background for them, this removes the IP risk that was there, which was associated with the product. They expect improved visibility in terms of the product up to mid FY28 now, and this will reduce some bit of a profitability for them as well. Also, Zydus is also another one that one should keep an eye out on the back of this news flow as well. Other company, that's one more company who's actually selling Myra background drug, and that contributes around 300 million to the US revenue annually also for them. So important to keep an eye out on both these names going forward as well.
Thank you very much for that, Vinny. Dhamesh, the one big trend that you can highlight today is the capital market plays. So BSE has done well, and so have some of these others like a JM Financial, Edelweiss. Have you done any analysis?
Yeah, I mean, capital market plays we have been liking, but again, we have been recommending them as a basket buy kind of a mix where you have both exchanges play, infra play, and wealth management play. What we have not been recommending was on the transactional broking play, so that we have avoided completely. Having regard to the basis numbers, the numbers were really good today, but again, it more will depend upon what is the pricing at which NSE will come out with the IPO, because there's still a gap between the valuation multiples. So seeing the unlisted price of NSE and the listed price of BSE, which is there, and 15-16% kind of compounding is still likely to be there. But having regard to that, and with 60 or 62 times PE price to earning multiples, will definitely warrant a check out there. So momentum is right now going in favor of BSE. But our suggestion would be to have some profits booked, and post NSE pricing is announced for its IPO. Thereafter, a more reasoned call can be taken on that.
Got it. Okay, all right. Dharmesh, you want to comment on any of these pharma names? What's the pick of the pack?
Yeah, Nigel, I mean, Lupin has been the pick of the pack for us because last 2-3 quarters it has been consistently giving stellar set of numbers with improvement in margin, and all geographies have been performing for Lupin. Commenting on like Aurobindo Pharma, I mean, to our mind, the numbers were really weak. If you look at in dollar terms on a reported basis, US market as well as their API business and growth market formulations had a serious decline. It was just the currency depreciation which helped them to manage some of the businesses into green, and these are the larger chunk of the share. So pharma, one has to go selective on it. I mean, one has to be careful about the valuation multiples and the growth opportunities. The top pick to us has been Lupin for last 2-3 quarters, and I think the way the things are shaping up, it's likely to outperform in the near future as well.
Got that. Stay on. We need to address the mutual fund data for the month of January. Equity inflows were disappointing, fallen by nearly 14%. SIP inflows were lackluster, but what stood out were the gold ETFs. They've surged to record levels and they've drawn in nearly 24,000 crore rupees. Vinny now breaks down the numbers for us. Vinny.
Hi, absolutely. So what we're seeing is that the gold ETFs, that's what's glittering, that's what's shining in the AMFI data, mutual fund data for the month of January. 24,000 crores is the inflow approximately for gold ETFs. To be precise, 24,039 crores. And versus December, which was at around 11,600 crores, that's a massive 106% uptick on a month-on-month basis. So gold, that was good. Silver, that comes in as well. That has also come in as an inflow of around 9,400 crores in the month of Jan. So clearly seems like investors wanted to participate in the gold and silver up move that we've seen in the last few months, and that increase coming in there, moving more towards safe haven also, given the geopolitical tensions that are going on, and seems like that's the participation that's seeing increase. Now, equity inflows, obviously, that is a bit under pressure. That is down 14% on a month-on-month basis. that came in at 24,000 crores. So if you look at it, the gold ETF number and the silver, the equity inflow number, both are at 24,000 crores, and this is the first time ever that we're seeing this number at the similar levels. Mid-cap funds, that's not done well this time. On a month-on-month basis, you're seeing a decrease coming in for mid-cap funds. They are at the lowest level since June 2025, while the small-cap fund inflows also have seen a reduction on a month-on-month basis, lowest levels that we've seen here since July 2024. So seems like this time the trend was mainly more towards multi-asset allocation funds, as well as in terms of hybrid funds and gold ETFs. Those stood out. While in terms of the equity inflows, mid, small cap, that was a bit muted. Large cap continued to be stable, so no complaining on that front.
Thank you very much for that. The Nifty is now closer to the 25,900. This was the third consecutive day of gains. The good part about today's intraday action is that we've been making higher highs and higher lows now for the third consecutive trading session. We've come off a tad bit from the highs of the day. The high today was closer to about 26,000. We didn't cross it, but we were close to that. But we've come off from the high point of the day. But still, on an intraday basis, we've made higher highs and higher lows. Tomorrow's going to be a big day in terms of earnings. So you've got M&M, Ashok Leyland, you've got Divi's Laboratory, Max Financial Services, and Patanjali Foods. These will be reporting numbers. Dharmesh, do you want to comment on the flows that we've seen in the month of January, and what is your sense of how February spanned out? Because in Feb, we've also seen that volatility come through in gold and silver prices. There was this big flash crash. From there, things have stabilized, but silver is still, 40-50% away from its all-time, 40% from its all-time high levels. What are the trends likely to be for the month of February?
Definitely, Feb is going to be very interesting to watch out for the numbers. The type of, the client queries and the SIPs which we are seeing in-house is more against towards equity. The confidence is building, and post that US deal being done, people are more excited about equities, and the valuations are, mouth-watering for most of the companies. So I think Feb would be, you will again see resurgence into SIPs and equity flows. Though the silver and gold may still, take a rest period. So our sense is that Feb will definitely be very good for the equity market. And this is the nature. There was volatility, so we saw some decline in the month of Jan. And as a built up to the budget, there were some, people who redeemed their funds just to have be in cash. So all has been deployed as of now.
Got it. Okay. All right. Thanks a lot, Dharmesh, for joining in and giving us all of those views. We look forward to chatting up with you rather soon. Well, the Nifty has slipped from the top, and the problem today actually has been the Nifty Bank, which has been the so-called main batsman. That's not really been in top form. It's taking a bit of a breather, consolidating, and then maybe, in fact, it pulls back. But at least for today, it's taking a bit of a break. That explains why the Nifty is not able to get up and going. Plenty of numbers coming out. Finolex Cables, that's the next one out there. Stock up close around 4%. For the time being, we only have the profit number that's up for you on the screen. But just going by the stock reaction, I'm guessing that the operational performance would be pretty okay as well. We'll wait for that particular set of numbers. The revenue number should come up for you in just a bit. For now, tell you what, slip into a short break, come back. Mithun Ashwath of Kiva Advisors will be joining in. Stay tuned.
Welcome back. Rupee is the best performing currency today, up over 0.25% against the dollar. This is after months of being the worst performer in Asia and amongst emerging markets. The trigger has been the US trade deal. Lata joins in with more. Lata.
Well, the rupee has been crawling higher over the past few days, and especially today, fortified, of course, by about 4-5 days of net FPI buying inflows into the market. That changes sentiment. It is the best performing currency among Asian currencies and EMs today. Actually, most of the currencies are in the red. Only yen and yuan are in the green, higher than the dollar previous day, but not as strong as the rupee. This, all these months, the favorite trade of speculators has been short rupee, long commodity currencies, because commodities were doing so well. And early today morning, dealers were telling us that people are still playing the trade because there was a burst of risk on in global markets, there was actually a tendency to short the currency. The guess of the dealers is that the Reserve Bank came and sold dollars at that point in time. It supported the rupee, and that may have been because it wants a stable currency. FPIs and other long-term guys come in when they see some stability in the currency. This is a guess, of course. Nobody can vouch that it was the Reserve Bank coming in. It could be others also who came in and sold dollars at higher levels. But clearly the FPIs are not yet confirmed big buyers of suppliers of dollars. At the moment, they have just stopped buying. The tendency of selling shares and taking out dollars, that has stopped. Are they coming in and buying dollars in a big way so as to invest in the Indian market? That coming in of dollars is not very strong. Likewise, exporters are also on the sidelines. They are also not offering their dollars in anticipation that someday 91 will come. The guess of the banker-dealer community is that maybe one shy of the dollar, below the 90 mark, say 89 and change, can change the minds of exporters and of FPIs, and they will come in and offer dollars in a bigger way. But at the moment, it's a wait-and-watch game. But the tendency to short the rupee and long the dollar is clearly out of the trade at this point in time. Rupee on a slightly firmer footing.
Okay, all right, Lata. Thanks a lot for that, for giving us some insights on that front. By the way, in terms of the markets, a few stocks actually are calling for attention. Grow has suddenly seen a bit of a spike up. We've been talking about these marketplace doing pretty well. You have BSE that's up. A couple of other names as well have done quite well. And Grow has now moved to the high point of the day. So just keep an eye out on that particular name. And IDBI Bank yesterday came in for some massive profit taking. But today it's got back to its winning ways. So that one as well had perked up a little bit. Mithun Ashwath, managing partner at Kiva Advisors, joins us on the show. Hi, Mithun. Good afternoon. Good to see you, Ben. Let's get straight to the chase. Give us one stock that you like.
Yeah. Afternoon, Nigel. I think, we spoke about some ideas last time as well about the textile names. If, the trade deal was to come through, I think we've seen a bounce in most of these companies. But I think the one which we spoke about continues to be something that we like is maybe Arvind Limited. Obviously, has spiked up, but on declines, maybe that is something which continues to be interesting. They've done well despite, the tariffs being high. In the last couple of quarters, they've posted good numbers because it's a play both on textiles in terms of garmenting as well as fabric, which they supply to even markets like Bangladesh, as well as even the technical textiles. So it gives you a kind of a whole-rounded play on the textile space.
But you're seeing a sharp correction in these names. Gokuldas Exports is down 3.5%. Indocount to Wellspun Living is seeing a bit of a correction. So after the run-up over the last few days, post the India-US trade deal, the interim, the framework being out, stocks today are seeing a bit of a correction on fears of increased competition coming through from Bangladesh. Mithun, what else do you like now?
So I think in terms of valuations, we are looking at, also say the pharma sector. We've seen quite a bit of a correction in a lot of the healthcare names, be it the hospitals as well as the domestic pharma companies. So that is something that we're keeping an eye on, and that could potentially provide some opportunities for us.
Any particular stock with the appropriate disclosure you'd like to share in domestic pharma and hospitals?
It wouldn't be appropriate for me to disclose anything at this juncture, but maybe next time we can talk about a few names. But I think that's kind of a structural story, the healthcare space in India, and quite a few of these stocks have come down in the recent past.
Mithun, you made this point with regard to the defense names in the past, and you liked a couple of them. At current reckoning, going by the spend that we heard in the budget 2026 was pretty good. Some of these stocks were not cheap, but some of these stocks had come through a big correction, though still they're not cheap. Anything stands out for you?
I think, Nigel, if you see this space, I think the spend, not only domestically, even globally, you're seeing a large increase in defense spending, even especially in Europe as well, where, most of Europe is not really spending too much on defense. There's been a sharp rise So I think this is going to remain to stay where defense spending is going to remain high. Even in the current budget, I think there was about 11-12% increase. So valuations obviously are a little bit rich. But I think what is more important in these companies, whether they'll be able to execute. A lot of them have very large order books. What we have to see is bet on companies which are able to execute that order book in a sufficient timeline. So I think that is what one needs to really look at.
In defense, which is the most attractive stock?
So I think on the defense side, we've continued to be big believers in company like Bharat Electronics, but obviously valuation's a little high, but continues to report good numbers. On the smaller companies, we have exposures to BEML, which was one company where it's more of a railways plus defense play and mining sector play. So it's a little bit more whole-rounded. Apart from that, we've spoken earlier as well. Bharat Forge is something that is kind of more of an auto components play, but now the business on the defense side is growing quite handsomely. So these are 2-3 names where we've got exposures on the defense side.
Have you exited or reduced your holding in any stock recently?
No, Rima, not in the recent past. We've not really reduced allocations. We've been more buyers of the dip rather than selling out at these levels, because the market's been volatile and kind of flattish over the last few months.
Okay, all right. Just keep an eye on the bottom of your screen. Jyoti CNC, that stock actually has taken a sharp knock. So though it's a good day, otherwise for the broader markets, there are a few stocks. Jyoti CNC actually reacting to its numbers. Volume's pretty decent. 10 lakh shares have got traded today. So that's falling on decent amount of volumes. Downtick is what we're seeing out there. Rima had already mentioned that some of these textile names as well have moved lower. And Kiri Industries is now down close to around 10% as we speak. So big downtake is what we're seeing out there.
Even Safari Industries, I think the numbers just came out some time back. And Safari, the top line growth is good at about 15-16%, but margins have contracted. And there you have the stock down nearly 1%, but taking a knock in the last 10 minutes post the numbers.
Safari actually I'll be waiting by to hear, because they had announced that they'll be raising some money. So I don't know whether there are incremental details that have come out there. But if they're going to be raising money, I'll be interested to know why are they doing that? Is there some inorganic growth in their mind? We know that VIP will potentially try to come back with a strategy. And VIP used to have 45% of the market. In the last few quarters, it's come down to around 35%. While Safari has moved very, very swiftly towards the direction of, of VIP. For the time being, VIP is up close to around 5%, but it's been a rank underperformer. While we know Safari over the last few years has been, a big outperformer. Mithun, you want to weigh in on this? The travel-related themes, something you like?
Nigel, honestly, I think, the valuations on most of the hotel companies have corrected. And, selectively, they seem to be a reasonably good opportunity with a 1 to 2 year outlook. Even some of the travel-related companies other than hotels have also corrected quite sharply. So I think the issue there is, I think there is some concern in terms of how the growth trajectory will be. I think the last quarter we saw a little bit of a tepid growth. But having said that, I think valuations on that space seem to be quite attractive right now.
Okay, so you like hotels, pharma, in the textile packs. Arvind is a stock that you like, and defense continues to be a major part of your portfolio. Any thoughts on tech? Are we in for a long grind lower for the technology names, mid caps, small caps, large caps? Or is there any stock in your portfolio?
I think, Rima, tech is one of those, exposures that which is there. Is more like a non-contrarian sort of a position, because I think valuations are attractive. The issue is there is no growth trigger at the moment. If the Indian companies are able to adapt to this AI issue, which is obviously going to hit their business models, that is when you may see, a rebound in these stocks. Otherwise, I think they are cash engines at the moment. The growth impetus is not there. So we need to see what these Indian companies will do. I think they're aware of their issues ahead of them. Now, how are they going to respond is the key question.
Okay, all right, Mithun. Thanks a lot for that, giving us your view on all those stocks. We look forward to chatting up with you rather soon. By the way, to the bottom of your screen, you have Escorts Kubota. They have come out with their numbers. Net profit goes up by close to around 12%. The revenue growth of around 11%. The street has digested the numbers. In fact, the stock has now moved to the high point of the day. So for the time being, the street likes it. Revenue growth of around 12%. EBITDA number up by close to around 30%, which would mean that margins would see a good expansion. And that should come up for you on the screen. 13.3%. That compares with 11.3%. And on Safari, the point I made was, they've now given further detail with regard to the funds that they're raising. They're talking about raising 500 crores by the QIP. We'll await further details on that particular front. So why are they raising it, quantum of that, and when do they want to do it will be quite important with regard to Safari. Well, let's really a quick check on the F&O Qs because we're getting into the weekly expiry final half-hour rod. If you look at today's trading session, the Nifty, it's gone, getting closer to the 26,000 mark, and that's got rejected a few times today. The PCR right now is around 1.12 the last time I checked. The options data is suggesting that, on the downside, the bulls believe that they can defend the 25,850 odd mark because the 25,900 put. The premiums got written aggressively. It started the day at around 100 rupees. That's down drastically. But this is the interesting one. The 25,950 call. Because of the premium erosion, the time value of money erosion out there, that's why the premium that was around 35 rupees, it's come down to around 10 rupees. You got the direction correct. So those, those that are writing that particular strike, they believe that this 25,985 odd mark will get defended. That's going to be a very, very important mark because the resistance comes in at that mark. Today's high as well is at around 25,990. So for the time being, the positioning is such that we don't get past that. If we get to that level and we hold about those levels, you can easily get a 50 to 100 point uptick. But for the time being, that's the range you're looking at. 25,990 is the positioning that it's not going to get defended. Not going to get broken on the upside. Stock futures come up for you on the screen. Zydus Life, fresh shots being seen on that. Their stock lower. Massive open interest build up for a stock that normally doesn't see a lot of action. Eternal, fresh buying, stock higher. Remember, it saw a sharp correction, 370 to 250. Now it's seeing some buying both in the cash market as well as, the F&O market. You're seeing the long build up out there. And Sambandana Madison, we'll speak to the management tomorrow. For the time being, the stock has come in for a bit of a short covering bounce. As is the case with SAIL. I recall yesterday during this time, I said it's potentially going to come out of the F&O ban. That's precisely what happened. And for the time being, it's seeing a bit of a short covering bounce as well. So those are all the cues. The market's making a bit of a dash, trying to go back towards that crucial resistance mark of 25,990. Take a break, come back. Nimesh is waiting for us. He'll tell us what's going on in dealing rooms. Our technical experts will also be joining in. Stay tuned. Welcome back. You're tuned in to Closing Bell. As promised, let's get in Nimesh to tell us what is he picking up in terms of dealing room chatter. Hey Nimesh, good afternoon.
Hi Nigel. It's the broader markets which continues to outperform. That's been the big theme over the last many days, and that's the trend today as well. So again, a day when the broader market breadth is quite positive, and that's the space which is really outperforming in today's market as well. Flows, again, a mixed day with a positive bias. I've been saying for a while now that FIs have turned net buyers, and that's showing up in the numbers as well. The street is a bit nervous about the DI selling, but within that, I believe, even for the domestic investor, it's basically a churn from the large caps to the small and mid cap. So the number looks a bit negative for the DIs, but they're selling out. Actually, they're supplying to the FIs in terms of demand, and they're churning into the small and mid cap. That's from a flow perspective. From a sector point of view, financials are under pressure today, but within that, it's largely the NBFCs which have seen a bit of profit booking in today's market. And Pharma, of course, a couple of names are under pressure for obvious reasons. But as I said, the bigger theme seems to be the broader market, and that's where the breadth is positive and the outperformance continues even in today's trade.
Indeed, advanced decline ratio still holding on to 2:1. Nimesh, what about stocks, individual stocks that caught your attention?
Well, so the first stock on my list is Nuvama. Now that the earnings season is over, Rima, you are going to see a lot of these blocks coming in from strategic investors or the promoters, so to speak. Nuvama stands out so that's my first stock. While the stock has been consolidating, I'm expecting a very large block deal in Nuvama very soon. The private equity investor owns 54%, and they could be the potential seller as well in Nuvama. So that's the first name. The second name is Eternal. Well, both Eternal and Swiggy are buzzing in trade. Eternal stands out on very large volumes. There was a block as well. I understand one long-only fund was a buyer in today's block. So if there are any disclosures, that will be interesting to watch out as far as Eternal is concerned. The third name is Grasim. Quietly, that stock has also moved up in the last couple of days. The delivery volumes has picked up. And for the second running, I understand there are very strong buy flows from larger FIs. So a bit of interest back in Grasim at current levels. And the last name is Tube Investment. We saw a big correction in Tube Investment last week when there was a large seller. One of the leading FI was a seller. Looks like the selling is largely over. I understand in the last couple of days some HNIs have bought, but the pullback seems to be largely because the large part of the selling pressure from that long-only fund is largely over, and that's why Tube is also buzzing in the last couple of days.
Okay, all right. Thanks a lot for that, Nimesh. Well, keep an eye on the bottom of your screen. Balrampur Chini, that stock should come up for you. Remember, it's seen a very sharp correction of late, and then it's gone through a time-wise correction as well. For the time being, the numbers look good. Margins at around 14%, 13.9%. That's an expansion of around 300 basis points on a year-on-year basis. Net profit up 60%, and the top line as well, that was good growth. So explains why that stock is up and about in today's trading session. Well, let's go across to Mitesh Thakkar. Mitesh, you've got a couple of trading ideas for us.
So, I think today, there's some reversal happening on the charts of IRCTC. So suggest a BTST with a stop at 630, 645, 648, thereabouts could be a good target. And the other one which I like is AI Industries. It's, it broke out yesterday, is giving a pullback today. A good time to possibly take some positions on the long side. So keep a stop below 45.74, look for targets of 46.25.
Okay, thank you very much for those calls. A slew of stocks are reacting to earnings. Ria has compiled that list and joins in with the details. Ria.
Well, yes, Samvardhana, Motherson has reported its quarter 3 earnings. The stock is up roughly 5% on the back of this. Revenue has seen an increase of roughly 13.5%, and even the EBITDA has increased by 13% to 3,043 crores in this quarter. Jyoti CNC as well has reported its numbers. Revenue has gone up by roughly 28%, and margins have come in at roughly 27% versus 25% in the last quarter, but the stock is down roughly 3.5% at this moment. For Edelweiss Financial Services as well, that has reported a good set of numbers. Net profit sharply up at 264 crores versus 125 crores in quarter 3 of last year. Even the revenue has seen a sharp increase, coming in at rupees 4,404 crores. And in fact, the company has also announced that Carlyle Group is going to be investing roughly rupees 2,100 crores in the company, and the stock is reacting positively to that, up roughly 9% on the back of that. Wakefit has also jumped up by 8%. The net profit this time around has come in at 32 crores versus a loss of 2.5 crores in quarter 3 of last year. EBITDA also sharply up at around 60 crores versus just 20 crores in quarter 3 of last year, and margins have also expanded to 14% versus just 5% in the previous year. For Amber Enterprises as well, this one also reported quite a good set of numbers yesterday. Revenue has gone up by roughly 38%. Margins have also expanded by 90 basis points on a year-on-year basis, and this time around the company has reported a net loss of roughly 9.3 crores versus a profit of 37 crores in Q3 of last year, but this was impacted by exceptional items of 112 crores in this quarter. For Sincera Engineering, good set of numbers here as well. Revenue has seen an increase of around 25%. This is the highest ever quarterly revenue for the company, both in the auto and the non-auto segments, and EBITDA margins are also at a multi-quarter high of 18.1%, and even the international business has seen an expansion of 60% on a year-on-year basis. For Axis Cades as well, good set of numbers. The stock has hit an upper circuit for the second consecutive session today. Revenue has gone up by roughly 25%. Net profit also seeing an increase of around 87% on a year-on-year basis, and EBITDA margins have expanded by almost 360 basis points. The last stock is BSE. That is also up around 6% in trade today. The average daily notional turnover of the company has gone up by 28% on a sequential basis, and even the average daily premium turnover has seen an increase of almost 30% sequentially.
Thank you very much for that. Wakefit is actually a big mover, a stock that Ria was highlighting. Very strong numbers. The company's turned around and margins have gone up from 5% to 14%, so practically tripled. And the company has also made an announcement of a new CFO, Parul Gupta, who's ex-Myntra. So that's also added to the investor confidence. This is one of the recent listings listed towards the middle of December. Very quiet listing. In fact, flat listing. Then stock went down to levels of 160, 170. But today it's up nearly 7.5%. But keeping it with earnings, Titan Britannia set to report their Q3 numbers. Manglam joins in with the expectations. Manglam.
Well, for Titan, it's a good set that the street is expecting, which is why the stock is near its record high ahead of numbers as well. And we already have a cheat sheet where, the street is expecting near 40% revenue growth, because the company had said in the third quarter they saw a 38% growth in the domestic jewelry sales and 41% growth in the overall jewelry business, which is led by other parts of their jewelry business as well. So overall, on a standalone basis, the street expecting a 40% jump over last year. A large part of that obviously because of the rise that we've seen in gold and silver prices. So 22,500 crores is what the street is expecting, with a 51% jump in the EBITDA. Obviously, this is on account of operating leverage, on account of a low base as well. Same time last year, there was an inventory hit that these companies had taken because of the increase in customs duty, or rather decrease in the customs duty in the budget that came in the last financial year. And the net profit jump is likely to be over 50% as well. The jewelry business for the Titan company has grown at around 41%, with 40% growth in their key brands like Tanishq, Soya and Mia, and around 42% in Carat Lane. We had watches as well, a 13% jump, and other businesses doing fairly well for them. So now that we know most of the details, margins are something that are extremely crucial, and the commentary around demand and margins will be important to track as well. For Britannia, here as well, a good set is expected. The big change during the quarter was Rakshit Hargave, who was appointed as the MD and CEO on December 15th, as Varun Berry tendered his resignation much ahead of his stipulated time. And here the street expects restocking post the GST-related disruption to actually aid numbers. So good set expected here as well. 8% revenue growth would lead to a 15% EBITDA growth. That means margins closer to that 20% mark, and a net profit growth of 16.5%. The entire revenue growth would mostly be led by volume growth, anywhere between 7 to 8%, and margin expansion will be led by operating leverage, premium products doing well, a lot of the key raw materials softening, and the company cutting back on those prices because of the GST rationalization as well. Nearly 95% of their portfolio has now been cut from 18% to 5% in GST.
Thank you very much for that. These are the two big numbers to watch later today. Titan as well as Britannia. Tomorrow, it's M&M and Ashok Leyland, which should be on your radar. Jay Bala of cashthechaos.com joins in. Jay, today we've managed to hold on to all the gains over the last 2 days. The Nifty above 25,900, but not able to conquer the last mile resistance of 26,000. That said, we're less than 2% away from our all-time high levels. Have you noticed a change in sentiment, a change in trend in the market? Do you think, you were fearing that we go back all the way down to the lows of last year. Do you think that fear is now out of the window?
Hi, Rima. That is not my view. I've been pointing to markets bottoming around the August lows, and the markets have come very close to the 24,400 mark. It bottomed at about 24,571. My view has been that the markets are probably on their way towards 29,000 that I projected and continuously projecting since April of last year. So there's one important thing. The markets must stay about 25,148. It can't even print 25,148 on an intraday basis. And if it is where it is going, like I'm thinking, possibly record highs due before this Friday. So I need to see, I can be a little bit flexible about the record highs, but it cannot print 25,148 for the markets to remain bullish. And so I believe if we get a record high, which it seems quite likely, the markets are heading to 29,000, and that remains our primary objective.
Okay, all right. Should be bracing for a date with all-time highs this Friday, presumably, if that 25,100 level does hold out. That's the important reference point on the downside. Jay, I wanted to ask you about Brent crude. Now that's a bit of a joke on the pack, hovering around that $70 per barrel mark yet again. A lot of movement with regard to Trump and what he's going to do next. Geopolitical tensions, they remain as a bit of an overhang. What's your view with regard to Brent crude?
Nigel, I think Brent is heading to 78 first, but then after 78, it's going to collapse below the lows it saw in December. That will also likely be below the April low it saw last year. So a little bit of short-term strength for Brent, 78, and then it cracks big time below the 54, 52 mark. And looking beyond, say, something like 12 to 18 months, post that new low, it'll probably begin a massive move towards $200.
Okay, got it. Bitcoin, very, very volatile. We have seen it in the past falling 40-50% and then recover. Will it do the same? It's half from the recent peak.
That's right, Nigel. Bitcoin, I'm turning bullish on it. And at the recent low, it saw at about 60,000 mark, 60,100, depending on which exchange you're tracking. I think that's likely to hold. If it were to break, it will be a very fleeting low. And once that's done, I'm anticipating Bitcoin to be on its path towards 145,000. But we are watching it quite closely and cautiously, but in a bullish fashion. And there's a possibility that the low it saw last week is an important low. So yeah, on the verge of turning bullish, or it's already turned bullish.
Sorry, I missed the level. 105,000 or it's 145,000 on?
145,000.
145,000. Okay. Hold on. Jay, we'll come back and talk about individual stocks moving around here in India and some trading ideas. We need to slip into a very short break. We'll come back. 10 minutes to go. And this is going to go down as a session of consolidation, resilience, where markets held on to the gains of the last 2 days with mid-caps outperforming, mid-cap index up 300 points.
Welcome back. Swiggy is swinging it away as we speak. Big move is what you're seeing on the stock. It's seen a sharp correction from the top, and now Swiggy is participating. Remember, we have Eternal Asters as one of the top gainers on the Nifty, but that one, in fact, has moved up. MTAR, just take a look at that stock. It's up close to around 8%. Good move is what we're seeing out there. And TD Power as well. What a beautiful move on that name. In the last few years, the stock is up, I think, 12 times or thereabouts. Big move is what we're seeing on TD Power yet again, and on very good volumes. But we're still in conversation with Jay Bala. Jay, you want to give us two stock calls for our viewers?
Yeah. The first one is on Sterlite Technologies, Nigel. It's breaking out of the inner head and shoulders pattern on the weekly time frame. This is a powerful breakout. It has potential to even scale record highs from a 12 months perspective. But from a short-term perspective, at 156, you can place a stop at about 115. And I expect the stock to touch something about 225 in the short term and proceed higher to something like 300 later on. And like I said, the medium to long term is quite bullish because this is a powerful breakout on the medium term charts. The next one is Linde India. Basically, the stock is breaking out of a rectangle pattern, and it's been consolidating between 5750 and 6300 for several weeks, and it's cracking above that. So this is likely to hit to somewhere close to 8,500. A stop loss of 5740 is essential. And be a little bit careful here. The liquidity here tends to be a little more volatile, comes in and goes out. So you might want to allocate sensibly here.
Okay. Jay, how you placed on gold and silver? I think silver you had called for a sharp decline. Is that correct?
That's right.
It's done, or is there more to go?
It's a little bit difficult now. I had anticipated it come to 65 to 58. It printed 64. I have a nagging feeling that it's not done. It might go back to 58 one more time. But before it does, it might retest the 91 level that I forecast last time. And but it's a bit ambivalent here. So, but I wouldn't venture too aggressively long or short at the current levels. I would rather wait for a few more sessions for it to show its hand. When it comes to gold, I think gold isn't done on the lower side. So that is what is giving confidence that silver will also get dragged low. In fact, silver is the leader here. But since gold's corrective downside is incomplete, I think silver will also go down. I'm a little more confident about gold. Gold might go back to 5,300 and then resume its leg lower somewhere close to 4,120 to 3,800.
Eternal Swiggy, big moves today, big volumes.
Yeah, I haven't looked at it closely, but the medium-term picture for Eternal is that it needs to come back to 190s before it can resume its medium-term uptrend. The high it saw about 360 odds. I think that's an important high from a slightly medium-term time frame. I think if it comes back to, but the long-term picture is pretty good and quite strong. But I would like to see the stock come down to at least about 200, 190 odds, and then proceed to the next leg of the up move.
All right. Who's, from the Nifty pack, who's going to do the heavy lifting, Jay? You know, you have been maintaining, I think 29,000 is the ultimate goal, right, on the Nifty? And now you've given us the reference point on the downside, 25,100. Who's it going to be? Reliance Industries is going to come out and play a splendid innings. Is it going to be HDFC Bank? L&T has been showing signs of life. Which is that stock that you would be relying on?
Yeah, I rely on Reliance. And I think the surprise is going to be IT stocks. I think it might drop somewhere close to 34,000 on the Nifty IT index. And then it might pull a surprise. Because from a medium-term perspective, it's consolidating on I believe it's consolidating on a triangle pattern. So it needs one more leg down, somewhere about 33,000. Once that's done, I think it will surprise a lot of people on the upside.
Got it. Okay. All right. Got that. What about the rupee? You want to give us a level out there? The dollar index actually has been considerably weaker. We had those elections in Japan. And yesterday you saw a big actually currency move that many people ignored because the other asset classes actually are looking very interesting. But the dollar index this morning as well took a leg down. The Indian rupee has been actually the outperformer. Lata just told us that. On the rupee, what are the levels you're looking at? And on the dollar index?
Yeah, Nigel, rupee is at a very important crossroads. If it can break below 18.5, there is even a possibility that that's what we have seen at about 92 is a long-term bottom for the rupee. But it needs to do a few more fluctuations because if it is a long-term turn, it can even strengthen something like 72. But we want to be a bit more careful because if it doesn't hold the 18.5 level, it can go back to 97. So it's an important crossroads for me. The dollar index, I think it could have put a very important low, and I have a objective of about 103 to 104. It's going to surprise a lot of people for the short term at least. But we'll take it a few baby steps at a time. At the moment, I think the dollar index may have put in an important low. It's a false breakdown below the October low, and it's putting in a hammer pattern there. So I think it has potential to surprise a lot of people on the upside.
Got it. Okay. And the rupee, what did you say? If it can breach below that 89 mark, it will head to 82, right? 82.
It's because it's a long-term. It's the trend that started from 1974. That's very close to finishing it, and it's the minor squiggles that's still pending. So that isn't what clear. We want the market to confirm that it's put in a long-term top. We want a few more fluctuations to happen, and then we can take a medium to long-term call. But if it doesn't hold 92, it has potential to go to 97. That was my original forecast in 2019. But the 92 is a very important level. I can revise that objective lower to 92. But so we are very watchful about the significant moves that rupee is likely to make for the next couple of weeks.
Okay, beautiful. We'll keep an eye out on that. Thanks a lot, Jay, for joining and giving us that view. Well, a day of consolidation for the Nifty. The Nifty goes home with a gain of close to around 50 points. Remember, it was a weekly expiry, so things got a little bit volatile in the final hour of trade. We rejected that 26,000 odd mark. The Nifty Bank was a relative underperformer today, but the good news was that the mid-cap index looked absolutely beautiful. Number of stocks advancing, outweighing the number of stocks declining. And from the Nifty pack itself, we had a few stocks that did do well. Eternal was up and about. Tata Steel was one of the top gainers. ONGC followed the big move that we saw in crude oil prices overnight. So all those three were the top gainers. On the flip side, Bajaj Finance as well as HCL Tech, both of them were losing in trade. But the good news is really that the good results are being appreciated. BSE, beautiful move out there. Stock's not cheap, mind you. And there are various other, problems with regard to STT moving up as well. But BSE ended higher. Amber, the street, liked the numbers, like the commentary as well. Samudra Motherson, another gainer out there. And Lumax Industries, if you didn't buy it in the morning, couldn't buy it during the trading session. Stock went home with gains of around 20%. Praj Industries, a stock that's seen a good correction from the top, was up close to around 15%. But on the flip side, a couple of pharma names, Oro Pharma as well as Zydus. Both those two stocks ended in the red. Net, a good trading session for the bulls, a bit of consolidation, but that was par for the course because the broader markets outperformed. We'll wrap up on this edition of Closing Bell. Stay with us, though. The team of Markets Forward is waiting for you on the other side.